Welcome, everyone, to the third and final conversation in a three-series discussion jointly hosted by the Nehru Centre London and the Observer Research Foundation. Today's session is about the road to Glasgow, co-financing the green transition. The first two sessions that took place over the past few weeks dealt with greening the recovery and creating an India UK research ecosystem. Sustainable transitions will come about when green investments are marshaled into the right initiatives and into the right destinations. Mitigating climate change will require huge investments. In India, sectors like energy, mobility, and the built environment provide a huge window for international finance to come in. And it will take transformative interventions backed by new thinking, innovative financial products, and more favorable borrowing terms to achieve this. We at ORF in Mumbai are hosting our flagship conference, Kulaba Conversation, on December 1st, 2nd, and 3rd, where climate initiatives, green finance, and electric mobility is primary on our agenda. Is it time to explore if London could play a catalytic role in financing Mumbai's green dream while supporting India's larger sustainable transitions? To discuss this and more, we have a high level panel with us today. Let me introduce to you the panelists. Mr. James Sangma, Cabinet Minister, Forest and Environment and Power, Government of Meghalaya. Mr. Akhilesh Tilotia, Principal, National Investment and Infrastructure Fund. Professor Nick Robbins, Professor in Practice, Sustainable Finance, Grantham Institute, London School of Economics. And to moderate this very interesting debate, we have Professor Shamika Ravi, non-resident senior fellow, Brookings Institution. Over to you, Professor Ravi.
So thank you, Siley, for that comprehensive introduction. You've saved me a few precious seconds, minutes. You said it would be a debate, but I seriously doubt it. I think there will be a meeting of minds, because I think after years of thinking about this from different points of view, we finally are beginning to find a common sort of an agenda, and states, the private sector, and academia are beginning to see how key this transition is likely to be, and how strategically it is important it is for emerging markets, and particularly for economies such as India and China. Today we have three eminent speakers who are going to talk about this subject from three very different angles. We have the privilege of having Akhilesh Tilotia from the NIF. NIF for India is, I think, strategically perhaps the most important institution which is going to help us meet this gap and think through how to plug this gap. I think strategically it is extremely important. So we are looking forward to hearing Akhilesh first. And then we move to Minister James Sangma from Meghalaya. The northeastern part of India, again, is a very important player in the conversation we are having, because it is one of the most dense green covers that we have, and some of the fascinating work happening in the northeast and in Meghalaya in particular is worth emulating and understanding better. And then, of course, we have Professor Nick Robbins, who's going to tell us his point of view from how he has been thinking about the financing gap and how this transition can be brought about. So thank you, gentlemen. Thank you for joining us this evening. Akhilesh, if I may invite you first, do tell us about the way NIF is approaching this important topic. But in your opening remarks also, please do tell us, what are the tension points right now? What are those unresolved big issues that perhaps we need to continue to work upon? So welcome, Akhilesh. Over to you.
Thank you, Professor Ravi. Thank you, ORF Nehru Center, for having me here. And good afternoon, good evening to all the colleagues who are here. This is a very interesting and an important session. And as Professor Ravi said, for NIF, this is central both to NIF, and I think NIF also is central to this thinking as we begin to get into the decade where we think about a lot of green finance and green investments. I'd like to take a step back and say that while we have all heard all the big numbers running into billions and trillions of dollars and pounds with respect to green investments, what isn't obvious is that investments necessarily translate into the finance being available. And so to that extent, solving for finance is an important activity that we need to think about in conjunction with investments. So investments are required, and I think there are a large number of sectors in transition that will require investments, and there are a large number of new sectors that will emerge where investments will be required, and there will also be a lot of stranded assets, stranded people, stranded business model that we need to think about, and they will require investments. Whether we have the ability to finance them or the instruments to finance them is something that we need to really deeply think about. As we at NIF think about some of these issues, we think that there is a PPP element in thinking about how we can put the investments together. And here the PPP stand for private investors, investors like ourselves who would look for commercial returns, for example. Public investors, which is effectively the government, either individually at a country level or globally, coming together to see how they can support green investments that need to come through. And finally, there is a philanthropic angle to it, so which is the third P here. The capital which can begin to take a more longer term look at some of the bigger experiments that need to be done, some of which will be successful, some of them will not be successful. Capital which is willing to take the risk that it may be lost, they may not receive the sort of economic return that maybe private investors would be looking at. It may or may not create the sort of social impact that the government capital would be looking at, but could potentially unlock either a new technology or create a new market segment. So between these three elements of capital, private, public, and philanthropic, I think we need to find the right balance. In our view, we find that there are a large number of sectors that are now green ready. Places where private investors can come in and begin to make an economic commercial decision of whether they want to invest in a particular project or in a particular sector or not. Specifically in India, we are seeing that happen in the renewable energy space, for example, right? So whether it is solar or onshore wind, there have been significant investments that have taken place. Even in the electric vehicle space, we are beginning to see two types of players emerge, whether it's the OEMs themselves who are beginning to take some lead, and there are some large unicorn founding companies that have begun to come up here. So to that extent, you're beginning to see private capital come in some of these sectors. In many sectors, it isn't obvious that they will come through in a manner that they do not impose some sort of a green premium on the citizens. And I think for this entire theme of green to be sustainable, the entire idea that when investments are being made, they will be sustainable, they need to get buy-in from the citizens, both as citizens as well as consumers. So effectively, you cannot have an industry running largely on government benefits or subsidies effectively, right? So eventually the transition has to be seamless. One of the things that we like to think about is that as the transition happens, it will be a natural move into what will be green for the planet as well as good for the consumer. And it has to match both these things for it to become sustainable. We can't just have the government or set of rules push through on what is important. And trying to make that balance between green premium that currently exists in some of these technologies and the sort of green ability to adopt green is, I think, going to be critical. We can talk as we get into the details of this conversation as to how we will bring the green premium down. There are a wide variety of tools that we have seen being deployed by governments, by private sector investors in terms of thinking about some of these things. And to that extent, I think the ability to get the right technology and the business model is going to be key. And we'll talk about some of those issues as we go forward. I know Professor Nick Robbins is here, and I'm very keenly interested in hearing on just transitions. Sometimes, as investors, we end up looking largely at the NPVs and the Excel sheets when we try and see what will work from an economic perspective. But again, as we said, the whole idea that there will be a large number of stranded assets, stranded people, stranded business model requires a significant transition. That's not something that necessarily gets a lot of focus from investors. And hence, to that extent, knowing what we can do, what role we can play along with the political as well as the civil society as we begin to think about some of these transitions, I think will be very, very good. One interesting element, and I'm very happy to see Minister Sangma here, one interesting development taking place in the world is to think about how we leverage India's green and forest cover, and specifically Meghalaya being here. Again, I think this offers a very interesting opportunity to think about some of those natural endowments that India has. I've been reading with some interest on the set of things that are taking place in Gabon, for example, as they think about the natural heritage that they have with respect to forests. Is there something for India to think about? Is something maybe we could converse as the part of this conversation? And finally, I'd like to end by saying that at NIIF, we've worked very closely with the UK government, FCDO, and seeded what is called the Green Growth Equity Fund. This fund is now on its way to become the largest single country climate focused fund. We expect this to be almost a $700 million fund, which will look at assets and industries which are in transition, which could benefit from green transition as we take place. And I think that represents a signal way in which different types of capital, private investors, asset managers, public, the government capital, etc., can come in together to create the right sort of opportunities from a financing perspective. And once you have the pool of capital, of course, there is a large array of places where this can be invested into. So those are my initial opening thoughts. Happy to engage as we go further.
Thank you, Akhilesh. Perhaps in the next segment, you could give us some specific examples. The green, the growth fund is a very fascinating idea, and we'd like to hear a little bit more. But let me now turn to Minister Sangma. Do tell us, please, about the pioneering work and the approach that Meghalaya and you, in particular, have taken to this topic. So over to you.
Thank you so much, Professor Ravi. I'm very happy, also very glad to be here in this forum and getting an opportunity to, learn more than, express my ideas, of course, yes. I just wanted to first introduce myself, and, I represent the state of Meghalaya, which is a very small state in the northeastern part of India. It's a very unique tribal hamlet, and it's got a very unique biotic regime. And it's also one of the top biodiversity hotspots in the fragile Indo-Burmese region. And for me, I just wanted to, at the outset, say that for me, COVID-19 has been such a personal reckoning, an eye-opener of sorts, where I have firsthand seen how institutions have collapsed, not just in our state, but all across the world. And without sounding like an alarmist here, I have to tell you that states like ours, like Meghalaya, and also the entire Northeast for that matter, this is we feel it's a civilization level challenge, and it is our existential Armageddon. I have always used this very popular quote of George Werner, a very famous climatologist, who says that COVID is nothing but climate change on warp speed. So coming back to where that I was saying that we are a forest economy, and what it means that most of our livelihoods are dependent on weather and climate. And today we are left with no choice but to set ourselves on a war path to save the environment and create decarbonizing pathways for our economy and our people. So it sort of got me started to revisit the foundational principles of our livelihoods, our economy, people, and nature. And like we as a state, for many years, we have had a deforestation-driven model where we've had no industries. So we've had to rely on our natural resources like timber, coal, limestone, and in the process, destabilizing the climate system as a whole. And this has made us realize that we need a new paradigm of sorts today. And we have to understand that climate change is, I think, first and foremost, a political crisis, and then secondly, an economic crisis. And climate change is an extremely complex topic that would require overhauling of our entire systems, be it transport, be it infrastructure, be it agriculture, forestry, supply chains, and very importantly, consumer behavior. It is no doubt a very daunting task to envision this kind of a societal shift. And we as a state, we wanted to have a holistic approach for the environment, where we work with the markets, with polity, with technology, and with people to create a paradigm of what we are calling an environment state. As I've mentioned before, we are a forest economy, and we have 76% of forested land that performs very valuable ecosystem services for the nation. This was just mentioned by Mr. Akhilesh, who said, how do we leverage our forest cover? So we do have 70% of our forested land that perform these valuable ecosystem services, not just for our own state, but I think for the entire nation. Therefore, our region needs to have environment as a dominant theme, which is embedded into the development and growth model of the state. So out of this came the idea of conservation and climate action. So me and my team, when we sat down and we asked ourselves if we can go about creating a slew of innovative green livelihoods, which are economically superior to brown jobs, we realized that for a forest economy like us, they actually don't exist right now. Rather, they have to be invented with climate action and conservation at its heart. So you can see that for states like Meghalaya, it is critical for us to mainstream regenerative and conservation approaches that can make our natural capital more resilient to future ecological stresses.
Thank you, James. That was quite emotive. We are very we are in this boat together. I think every country in the world, and I think particularly emerging markets, having living through the COVID crisis, has only made this problem more imminent. And I think this is the right time. I think there is a policy window opening when I think convincing other policymakers, convincing consumers is, I think, a little more, has become relatively easy. And I think we do need that strategy that you're talking about, that a new development and responsible growth strategy at the state level. We would like to hear a little bit more, perhaps later in the discussion, on what does that growth strategy look like? What is a responsible green growth strategy for Meghalaya? And more importantly, I'd like to know, how do you convince your finance minister and the voters at large? Is there a broader public conversation in the state? Because I think, as you said, the problem is political, and we need to overcome that and have that difficult conversation with people. Let me take this conversation next to Professor Nick Robbins. Nick, you have been looking at this problem for some time now. You have been talking and writing about this. How do you see this transition happening, and where do you see are the sort of the greater achievements, and what are the big challenges that still remain, particularly for a country like India?
Well, Professor Ravi Shamika, ORF and Nehru Foundation, a real pleasure to be with you. And it's really good to follow from Akhilesh at NIIF and the Minister Sangma from Meghalaya. Really, really insightful. So I'll try and add an international perspective just about myself. I've had a background in the financial sector, working in banking and investment. So as a practitioner, and now work at the LSE, really thinking about how we roll out and expand sustainable finance across the financial system, with a particular focus in the UK, but also in really key emerging economies such as India. And we're partnering actually with CDC, UK's DFI, and others thinking about finance and just transition. So I also wanted to touch on four themes. First is the need and the opportunity, particularly in the coming decade. Second, to think about how what sort of seems to work in terms of mobilizing finance. Third, then focus really on the international finance piece, which will be one of the big topics at the COP26 in Glasgow. And then there's some final thoughts about sort of system change within the financial system. So Akhilesh talked about the discussions about the trillions and the progress. I think what is extraordinary is the progress we now have. We now have banks and investors with $80 trillion of assets signed up to net zero through the Global Finance Alliance of Net Zero. So that's fantastic. So that's really good. But at the same time, obviously, we still have a lot of assets in the banking investment sectors allocated towards fossil fuels, and also other activities which are degrading nature as well. So we recognize the progress. We also recognize what needs to happen this decade. I think a lot of people are talking about 2050 and net zero and so on, but all the analysis suggests that this is the crucial decade. This is really the takeoff decade, really deploying at scale some of the techniques we've already delivered. So latest evidence and analysis from the International Energy Agency, clean energy investment globally needs to increase from 1 trillion a year around now to about 4 trillion a year globally by 2030. And in emerging markets such as India, that fourfold increase actually needs to be a sevenfold increase. So the 2020s need to be a rapid ramp up process. So that's the need, and also the opportunity, I think, as Akhilesh was saying, and the minister, that these are green investments are investments which obviously support and regenerate the environment, but also generate strong, resilient returns for communities and also for investors. 3 priorities, obviously net zero and clean energy, which you've heard about. Resilience and nature, I was really pleased to hear the emphasis there, particularly in the context of COVID, a biotic disease, and we know one of the main drivers, zoonotic disease, and one of the main drivers of zoonotic diseases is degradation of biodiversity. So I think seeing these twin environmental crises, the two things coming together, climate and nature, really, really important. So net zero and energy, nature and resilience. And then the third is questions around just transition and livelihoods, making sure all of this is contributing to long-term sustainable development, improving incomes, improving quality of jobs, and so on. Investors like to talk about ESG. The green transition is about both the environmental piece, the E, but also the social dimension. And clearly, India is absolutely at the heart of this. And a crucial piece, which maybe we can come into discussion, is how do we reduce the cost of capital that is often quite high in countries such as India for this relatively capital-intensive process of transition. So that's the need. Questions of mobilization, and we're talking both about the domestic situation in India and also the international. Clearly, there's a domestic financial policy dimension there, and there's a lot of work now starting with the Ministry of Finance, Ministry of Economic Affairs, but clearly the central bank, the RBI, very important now taking on climate actions. SEBI, the securities body, has been doing a lot of work for a number of years and is really sort of improving its action. And then domestic financial actors, anchor institutions such as NIIF, banks, capital markets. The green bond market is relatively healthy. One area I still am looking for more action from, I must say, in India is the institutional investors, domestic institutional investors and pension funds, perhaps not moving as fast as they can, but I think that can move. And then we have international public finance and international private finance. One of the things I think we still need to pay a lot more attention on is how do we make it a normal process whereby the world's big pension funds, insurance companies allocate large amounts of capital to secure investments in India's green transition? How does that become the norm? At the moment, it's not the norm, but it could be the norm. And I think India could be a very attractive place for those routine large allocations of capital through equity markets, debt markets, and infrastructure. And that's perhaps a real opportunity, I would say, for India. Coming to international finance, particularly at COP, industrialized countries have committed to allocate 100 billion provide and generate 100 billion in climate finance by 2020 from the industrialized world to developing countries. That has not been achieved, so that's a great disappointment, I think. Clearly, for developing countries who have to suffer the worst impacts of climate change, need access to capital. So one of the big issues is not only how do we ensure that 100 billion is achieved, but also that we double that, I think, by 2025, and we use that very scarce and precious public capital to crowd in private capital, to reduce risks, and perhaps to focus on some of those public goods which maybe the market won't provide, which could be areas in some of the areas around nature and resilience. So that's going to be a big topic. I think what is interesting at COP is there could be a lot of international investors seeking out attractive assets, and again, I think that's a real opportunity for India. So finally, just closing, thinking about system change. We need all these various parts of the system to work. We need the policy and the central banks and the regulatory side. We need obviously the private capital to be aligned to long-term sustainability goals, and we need finance to be responsive to people, so it actually delivers on the social outcomes, and also to place, which is why it's so good to hear about Meghalaya from the minister. I mean, in a country the size of India, how this becomes regionally specific, as well as sort of thinking about the national needs, and particularly in terms of finance, how we really ensure the green transition reaches the sort of micro and SME sector, which obviously is the sort of heart of the economy. How can we ensure that some of the sort of financial inclusion aspects perhaps also have a sort of green finance element? And then I think at the beginning we talked about financial centers. When I was working at the UN, we set up the Financial Centers for Sustainability initiative. So this gathers now over 30 financial centers, and London was one of the founding members. At the moment, I think Indian financial centers are not part of that alliance. And I think Mumbai clearly as a major financial center, it'd be very good to see Mumbai becoming a real hub for green finance. So Shamika, I'll hand back to you at that stage. Thank you.
Thank you, Nick. I'm sure you're all familiar with the fact that we launched in India the Social Stock Exchange as it's one other institution which is meant to make it easier to channel funds into all of these areas. Of course, it is meant to be larger, the impact sort of sector, but environment and social and governance obviously are a large part of it. But I do believe, having heard all of you, that I think while everyone is coming at this problem, and I like the fact that, Nick, you have made it not just the next 30-year problem, but you're saying this is a crucial decade. And in that sense, the binding constraints does seem to be capacity, state capacity. Or if you can think of it as a coordination problem, I think there is a growing demand in the market for something like this. But we have not been able to design instruments, price instruments. So is it more a product design problem, or are we talking about basic regulatory hurdle and state capacity as the key constraints? I'll take this question to you, Akhilesh, first, that in your functioning and the NIF experience over the last couple of years, what do you think is the big binding constraint right now, given that this decade is critical?
Thank you. Yes, this is an interesting question. And I think as we have grappled with some of these issues, we've realized that regulators as well as investors are both evolving. This transition, while it has been spoken of the climate change issue over the last couple of decades, the policy window, the Overton window in some sense, where policy changes are beginning to take place, is only in the last couple of years, where there has been a massive spurt in the way we need to think about this. I think regulators are also beginning to grapple with what it means when you go through such a transition. And those regulators can be in the financial services sector, and Nick mentioned elements like the central bank, or let's say the SEBI equivalent, the capital markets regulators, etc. And across all of them, they are beginning to figure out how this can be made easy across within the country as well as globally. At NIIF, something called the NIIF Green Frontier Initiative, which helps bring together a wide variety of regulators, policy companies which are in transition, investors, both local and global. And I think Nick, an important point that the global Indian capital market needs to wake up to this reality of transition, and will possibly be one of the larger investors in this transition. So bringing the entire set of stakeholders is an important element, which is one thing that we do. We realize that there is no right answer currently that everybody has aligned towards. Look at the sort of number of definitions that have come through which are trying to do this coordinating role. And again, Nick mentioned one of them. There are others like the CFI that is there. There are others that try to bring together sets of people to this topic. So to sum over the next year or two, and especially maybe with guidance that emerges from the COP26 discussions with the world leaders, etc., maybe we begin to form a way in which everybody starts to talk along the same vocabulary, uses the same language. One of the things that we've been working towards is to see how we can harmonize taxonomy, for example, in this whole business of financing. Knowing what is green is a very important element. What may be green for me may be relatively not as green or very green for you, right? And so should funds go there? Should they not go there? Also, as investors, sometimes it becomes very difficult to say that there are only sectors which are green, but not processes within sectors or older sectors that are green. So there cannot be a big binary 1-0 between, because some of the older sectors are also trying to reform themselves as required. So to some extent, understanding what green is, how we can work towards ensuring that not only does these which are in transition, the society knows, the investor and the financier knows, is going to be an important element. And I know we've been working closely. There is an Indo-UK Sustainable Finance Forum. There has been discussions to say how there is across the two countries, but also more globally have a vocabulary and knowledge towards that. So to some extent, I think the language will fall in place. And while it does appear today to be some sort of a capacity issue, it's also because this is a new segment which is emerging. So I would give it some more time for the systems to solve for themselves. I'd like to touch upon one small point, with your permission, Professor Ravi, on the point about saying that how do we bring down the green premium, the point that I think Nick also brought about. And he mentioned an element about bringing down the cost of capital. I think one of the important things that we need to recognize is that while the cost of capital is a very important component in transitions, and there is a dire need to bring that cost down, he also touched upon the point that there have been large commitments that have been made globally, which need to be in some sense backed up with the money behind all the commitments that have been made. But we should begin to think about this transition not just from a capital perspective, but from an overall perspective. And I go back to the point of saying that any transition to be sustainable, the citizen and the consumer needs to adopt it. And that adoption will happen not just because the cost of capital is low, but the overall cost to the final consumer is at least relatively equal, if not cheaper than what the brown or the black options are, in a sense. And again, we are seeing that in renewables. It's a point that we made earlier. If we are able to do that, that is going to be critical in this transition. And that's not just a capital cost issue, that's a business model issue. That's an issue of saying, is the technology available? Is it available cheaply? Can we make it locally here so that potentially there is the entire element of jobs that Minister Sangma was talking about? We have to think through the entire value chain and not just focus on the cost of capital. capital, because only then does the entire transition take roots in it. Over to you.
Thank you. And again, just to give you a bit of a head start into the next segment, Akhilesh, please do think of how are we going to audit this in terms of what are the indicators? Are we in a position to measure beyond the financial or the economic viability of it? Because our aspirations of this transition are defined in so many different ways right now that I understand when you say that we need a common language, but we need specific indicators. And is there a conversation? We'll get to that in a minute. But James, over to you. Do tell us a little bit, please, about what is this new development of growth that Meghalaya is thinking about?
Yeah, you had asked, Mr. Akhilesh, about, is there a design flaw? And, so I tend to think that, that there is a design flaw and there is need for new imagination. And when I speak from a very micro perspective because, our state is very small, though we have very rich biodiversity, but we are a very small state. And, before I talk about the financing part, I just wanted to touch upon how is it that we plan to implement this. And we, as a state, we have put together a sort of a framework which dictates our initiatives and our actions to create a template of greening our development model. And for us, the foremost out of this is few verticals that we have designed. And the first is the natural asset registry. So what this is we are basically inventorizing and assessing the natural and biodiversity value of our forests. I think that we as human beings have always been taking things for granted for too long. And we've managed our portfolio pretty badly by not treating nature as an asset. One of the ways that we are doing this is by creating a very unique biodiversity heat map that is driven by artificial intelligence and spectrometer technology. We aim to achieve that we will be able to arrive at our carbon stocks through this method. And, this is whereby we go into the economics of our biodiversity. We are also calculating that cost for us to look at innovative ways of financing and protecting our nature, and honor it for the services it is performing for nature, as I had already mentioned. Then the second vertical is our natural assets bank, and we want to treat our ecological assets as monetizable capital for attracting green funds, green bonds, and capital for further enhancement for services it is offering to the country. There has to be a return on investment for these ecological services. That is what we feel. An example of this would be carbon credits, carbon loans, green bonds, and impact investment, along with sustainable funds that can be obtained to improve the ecological services offered by banks. Of course, along with this, our agriculture also has to be regenerative, and for that, we are designing a carbon farming mandate that we are designing right now. Then the third part to it is nature-based legislation. So I feel this is very important, and we are working on protecting and legislating for nature. In other words, we are working on a climate emergency framework, and we've already started the process for that. Biopatents for our indigenous technologies, like the Living Roots bridges, which, as you all know, is using roots of the Ficus elastica tree to create bridges. This is a very old indigenous technology which is being used in our state. And also legal biodiversity and carbon offset mechanisms along with that. Then comes the one of the most important parts of what we're trying to do is to build up nature enterprise infrastructure. This is where we want to prototype green jobs. So for this, we are piloting innovations like algal farming for biofuel, vegan leather, which is made from our pineapples, ecotourism models, then regenerative agricultural practices. We are marrying our indigenous knowledge, like traditional medicines that have been going on for centuries, into wellness products. And one example of what we see in the world is the Japan, where they have done this fantastic job of packaging their environmental and nature positive traditions into a premium value chain and consumer experiences in the form of forest bathing. There is also a carbon farming mandate on the cards for us, and mainstreaming traditional environment and conservation related vocations into formal high value jobs that we are thinking of. And then lastly, and very importantly, community sensitization. This is, I think, for us, one of the most important parts where we need to create an alternative current or power structure. We know that market forces are moving towards green jobs, and it is time for consumer and public sentiment too. So we're doing a lot of demand side interventions, like building a climate change museum as our public cultural landmark, or introducing climate change and conservation in the curriculum of our school children. And we hope to create a decentralized form of environment crusaders among our next generation, and creating a bottoms-up revolution from that point of view.
Fascinating, absolutely. I could hear you for the next 1 hour. But the breadth of experimentation, James, that you mentioned is absolutely mind-blowing. And I think what might be worthwhile is that while all of this has really happened in the last, let's say, half a decade or so, it might be worthwhile documenting it. And this blueprint that you're talking about might be worth emulating. So perhaps we could ask, and I'm definitely going to try and make an effort to get a Niti Aayog to use this blueprint, perhaps fine-tune it and take it to the other states. Because the kind of state capacity that you have already put in place, I think the other states can perhaps benefit. And I'm not just talking about the Northeast. I think there are several other states in the country that will definitely benefit from the kind of planning that you're doing for this transition. So absolutely kudos. And we're very delighted to hear that. Now, taking the conversation to Nick. Nick, given the way you have been looking at this problem, capacity in terms of state capacity, you've just heard James talk about all the experimentation happening in Meghalaya, but I must, we must be humble and acknowledge that this is rare. There are very few states, and I would dare say across most parts of the emerging market, but even several parts of the developed markets, where the state capacity to think about this transition is very limited. So what exactly is happening at, let's say, global multilateral level to break down this, make this coordination problem a little less costly? Is there something happening in terms of building state capacity for this transition?
I think it's a really interesting question, and I love the idea of this National Assets Bank. And James, we're going to have to talk more about that. So one of the things we are really focusing on is the question of place. So whether it's a state level or lower down, so city, district level, we're doing that in the UK and so on. And I think one of the things that actually the financial sector and financial system is not very good at is thinking about the particular needs of place. Sometimes, obviously, we may have particular financial institutions, banks, which may be linked to particular states. But by and large, particularly international finance, likes to think in terms of large institutional assets, listed companies, bonds, and so on. But actually, this transition, this green transition, will happen in place. And there will be particular challenges in some of India's coal heavy regions, for example, and that's the issue of the just transition. In the industrialized world, we've had rust belts in the past when we've had transitions. How do we really ensure, how do we anticipate this and think ahead so that those types of regions and states actually that we do generate a much better future, as we know. I mean, renewable energy, electric vehicles, all these areas are more job rich, obviously much better in terms of people's health and much better in terms of quality of life. But we need to think about that. So we need to break it down from the global and national to those, maybe those sort of stranded regions or potentially stranded regions. The green areas, I think, and Meghalaya is a really interesting area, and then many other places as well. I think one of the things we're finding just in UK, which of course is a tiny country, is how we move from the big statements from, let's say, the big banks or the big investors to what it means on the ground for their regional representatives and so on. How do we ensure, I don't know, that in every state the person who is heading a bank, whether it's, I don't know, State Bank of India or HDFC, how do we ensure that all their relationship managers down on the ground are really skilled in terms of responding to the needs of either business or households or communities in terms of, and I think that translation is still a big gap. We have a lot of high-level statements, but getting that down. So I think in a sense, the green skills issue within finance, particularly, let's say, moving away from headquarters, is a really, really key issue. And this question of capacity at the subnational level, a really important piece. I'm very pleased to be part of the India-UK Track 2 dialogue on climate, and with NK Singh, who's obviously a real guru in terms of finance. I'm co-chairing the climate finance track, and this is something which NK Singh is really focused on with all his experience in the fiscal commissions, is actually not just how you get the sustainable finance, green finance right at the national level, but really so it works at the state and also the district level.
Thank you, Nick. In fact, some experience, evidence from the past literature, from the social enterprise space or the microfinance space, from Latin America. In fact, the findings are very similar if you look at Bangladesh or some parts of southern India, is that eventually it is the incentives within the bank, the way the HR policies are designed. What do you reward people for? Is it to eradicate poverty or to lend more? And often that seems to be a trade-off. And I think eventually we have to get down to that level of discussion. And I think policies, I think the conversations at the top level, I think they are converging. I mean, there are differences and coordination problems will remain, but clearly the conversation has moved towards finer experimentation. But I think I do look forward to having another round of this fascinating discussion in perhaps a year, given that Nick has declared that this decade is truly going to determine whether we reach that inflection point or does the trajectory remain what it is, which I think, while for India, having met its target and perhaps the only G20 country which is on its way to meeting the obligations, remains a larger concern for most other countries. So thank you, gentlemen. Thank you for your time. Thank you, Warren, for putting this fascinating conversation together. We also look forward to putting a short, an op-ed or something that the general audience, the general public can learn from the kind of experimentations we're having within the country and the conversations that India is having with countries like the UK to move this common global concern conversation forward. So thank you all. Thank you for joining us.